In this video, I'll go through our accounting work together problem 11-2 in page 331 of our Century 21 accounting textbook, edition 10E by Gilbertson, Lehman, and Gentene. So credit to them for this problem in this textbook. And so the problem states we're doing accounting for sales returns and allowances using a general journal. And using the current year, journalize the following transactions on page 6 of the general journal. So we'll just go ahead and fill the page number in. Source documents are abbreviated as follows: credit memorandums are CMs and sales invoices are S's. Okay, so first one, June 4th. June 4th. Granted credit to Keller Associates for merchandise returned. Okay, so we're going to know that if we're granting credit for merchandise returned, the debit will go to sales returns and allowances, and then also sales tax. So that one would have been sales tax payable will be an additional debit, and the credit for this would be accounts receivable and Keller Associates, because they will owe us a little bit less money after this. Because perhaps, let's see, it says we granted credit to them for merchandise returned. So this would be a sales return. All right, credit memorandum 28. And the debit amounts are first $245 to sales returns and allowances, and then the sales tax payable portion is $1470, and then the accounts receivable is the total of both of those two amounts. $259.70 matches what they have here, which is good. All right, next one is on the 9th, and learned that a sale on account to Ashton and Lindsay LLP was incorrectly charged to the account of Abraham Corporation. Memorandum 61,623. So our debit would be Ashton and Lindsay LLP, and our credit would be Abraham Corporation because it was incorrectly given to them the first time. Now we have to swap these two. So this one will be credited and this one will be debited because there would have already been a debit to Abraham Corporation for this amount that was wrong. So 623 on both of them. And this was, again, Memorandum 61. Next problem is on the 12th. Sales returns year. Granted a credit to Lambert Schools for damaged merchandise. So this is going to be similar to the first one. Sales returns and allowances. And then in our credit, it's going to just be accounts receivable and Lambert Schools. I would assume that because Lambert Schools is a not-for-profit or a government organization, there was no sales tax as we had in the first one. And it was CM 29, the book says, credit memorandum 29, and the amount was 206. Okay. And finally, on the 26th, we see that a sale on account to Keller Associates was incorrectly charged to Carson Properties. So this will be a lot like this one. So Keller wasn't charged the first time and they should have been, so we'll debit them now, and Carson Properties was incorrectly charged, so we'll credit them. And this is Memorandum 62, it says. and the amount was $598. Okay, so I believe we have all of them journalized now. Took 5 minutes. And now we have to post them to the accounts receivable and general ledgers. Hopefully I can get that done in 10. If not, we'll just stop wherever I stop. All right, so the first one, June 4th, sales returns and allowances. And this was on page 6, $245. So we'll go back here to sales returns and allowances. And this was on the 4th. And this was General Journal, page 6. And it was for $245 debit. So our new debit balance is the previous balance plus this debit. And this is account 4130. So we go back here in our posting reference and write that account number in now that it's posted. Sales tax payable, $14.70 debit. So that will reduce the previous credit balance, so we'll subtract it. And again, this was on the 4th and page G6. Oops, I shouldn't have put that right there. There we go. And account number 2120. And now we have accounts receivable, credit of $259.70. $259.70, still G6, and still the entry on the 4th. And so our new debit balance, previous balance minus this credit, account number 1130. And then we'll do our slash. And now we need to put it in Keller Associates. So Keller Associates on the 4th and G6 also had a credit of $259.70. So their new balance, we'll subtract that credit and we'll post 140 is our posting reference. Next entry, on the 9th, Ashton and Lindsay, $623 debit. Ashton and Lindsay on the 9th, 623, G6. Can't hardly say that. Okay. And the previous debit plus this new debit balance and account number 120. And then Abraham Corporation credited $623. Abraham Corporation, $623. So the previous debit balance, subtract the credit entry, G6, and this was still on the 9th, right? For Abraham Corporation, and account number 110. All right, sales, returns, and allowances on the 12th for $206 debit. So on the 12th, 206, still the same page in the journal, and we'll have to add to the previous balance in account number 4130. And now we go accounts receivable and Lambert Schools, $206 credit. So accounts receivable on the 12th. And the credit was 206. So our debit balance reduces. Account number 1130. But we still need to give it to Lambert Schools. So $206 credit to Lambert Schools on the 12th, and the new balance, subtract that credit. So now we're 150 is our account number that goes here. And Keller Associates. All right, last one is a debit of $598. So Keller Associates, oh, that date was the 26th. Okay. 26th, G6, and Keller Associates was $598 debit. And this is a new debit balance. We'll add it. 140 is our reference. Now Carson Properties reduces by $598. And so it's the 26th. G6, credit of $598, reduces their receivable, or our receivable from Carson Properties, and account number 130. And there you have it. In 11 and a half minutes, I made it through Work Together 11-2. And you can too. Or at least, maybe half hour.